Okay, apparently nobody was hearing me. If it if it's good now, just tell me please. So, Halit, can you tell me if it's good now? Okay, perfect. So let's go. Good to see you here, man. So, I was saying that we had quite a nice range here today with a nice sell model that were in play. We had approximately 286 points, approximately as a range. That's really nice. So we had also back and forth movement that would give you many opportunities today to come and take your bread, depending what time do you trade. So as I'm in Europe, I also look at London. So I'm gonna begin with London trading, and after we're gonna go for this price action here and the trade I took that yielded me quite a nice amount with 10 micros. So I trade micros, I don't trade full contract as I trade generally 50k account. So let's begin first with London. So as we had a really large range day on Tuesday, you can expect this kind of consolidation on London. Okay, so this morning I was streaming and I was thinking that we're gonna maybe go for this equal highs here. Okay, but we never could reach that. So with the 3M cerebral we can see all this consolidation, and after it retrace here at 4 a.m. and began to retrace. So took so we had a trend line here, retails see what they see a retail trend line, so they try to buy on a breakout to go for highs. Here they are smoked, go lower, market structure shift here. So that's the market structure shift there. MSS, we're gonna write it like this here. So you have the MSS, king back at OTE. You can use that if you like it here at the OTE. But what do we have here? We have this IFG there. This is where we come. In this range, and after we have the sell-off, so we had this low and this low and this breakaway gap here, as you can see. And you see this low had no tail, no wick, so it's a high draw on liquidity with this breakaway gap. So breakaway gap can be used as a draw on liquidity for later on here. So trend line breakout, smart money sell, market structure shift, come back at the OTE, IFG. So we have a deep retracement, and after price come down, you have this fair value gap here, pushing price lower, this volume imbalance. It acts more as a liquidity void because you can see there is nearly no wick there here. So you have the volume imbalance there. So you can see there is nearly no wick inside there. So it acts like as a liquidity void. Is really when you have the right drone of liquidity, is really nice PGRA. So also we can see that this happened at the macro. Okay, so you had 315, 410, so 10 first, 10 last minute and 10 first minute at every hour. So the macro there. And price run, market structure shift, came back OT and went for this price action. So first of all, price was really consolidating here after running from 2 a.m. and we have to remember that everything that goes up will at a moment or another retrace, and this is what it did here. So quite a nice trade possible there on London. So do you have maybe any question for this setup here? Because here you can try to avoid to go in because of two things. So you don't want to trade London zero bullet when you have a large range day. So the previous one, that's really important. And you don't want to trade when in the direction if it's really running from 2 a.m. So we can see here 2 a.m. it's a open. Okay, that's an important open here as midnight, and we can see that we directly went far away from it and from midnight also. So we were in some kind of deep premium, and you can see here the return back on this 2 a.m. open here. Okay, so a really nice setup, that I didn't code. Okay, I didn't have it because my focus was wrongly on these equal highs on the morning. So this is for the morning. So as you can see, pre-session, nothing really interesting. You don't want to trade pre-session when you have a high impact news coming in. And today, as an NFP week, we had a lot of news today: 8:15, 8:30, 10, and 10:30. So this was the 8:15 news where we went just above the midnight opening in the 1 minute. So first of all, before going on the 1 minute, so I'm gonna take another chart really fast so we can see it better. So this one, because the 1 minute is really important for order flow, finding an entry. But first of all, you need to see where we are going in the 15-minute time frame, and you can see it in an egg chart. You can see it, okay. And I'm gonna give also some other details about how to spot this kind of sell side every, because we can see here we have the buy model and after the sell model coming in this price action. So basically we had this consolidation here, and we are leaving it, as you can see, we are leaving it with this big fair value gap. So this is the first fair value gap. 8:15 news comes in, we just tag here, and what did we have in this leg that could act as a drone of liquidity? So if you look, you have, first of all, you can see here this is equal lows, perfect one here. it's not difficult to see them. Once you see them, you cannot unsee them. Here, all of this. So I could say like this, okay? And after as a potential target, I didn't have any more. I wasn't looking at it because, as you know, ICT says that whatever the law of the day we put in, we want to target that on the PM session. If we don't we don't hit higher time frame PDRA, like a weekly previous high or previous low, or monthly previous high or previous low, if we don't hit that, generally the PM session gonna do what the AM session did. So that's what's happened here. But we had this equal lows to target, and here we can see it even much better. So on the 5, this one, and you can see the consolidation that we had here and here, all of these equal lows. So we could even take this one, okay? So that's quite precise, and you can see this is where price made the retracement and after wanted to go lower, okay? So that's the first thing you need to ask yourself, where price can go, okay? Where price can go and why. And here we can clearly see the equal lows that can act as a target. And if you look at it, so at this consolidation here, so all of this, so it acts as an original consolidation, okay? We can say that here. So what is the characteristic of this consolidation? We can see that buy side was delivered, sell side, buy side, sell side, buy side, and after it leaves that. Once it leaves that, we can consider that as a balanced price range. Why a balanced price range? Because buy side and sell side, and buy side and sell side again was delivered. So if you take, for example, a graph and you want to know what is balanced price range, you can have this here. So you have sell side, buy side, and sell side again deliver. This makes this zone here a balanced price range, okay? And this is really important because sometimes we can think, yeah, we have kind of equal highs here and here also. Yes, but this zone is balanced, okay? We already did all the damage we needed to do, and smart money had time to accumulate there. So you don't want to go in this direction anymore once you leave the consolidation. So once you leave that, you don't want to go into this direction. Why again? Because it's really important, because it's balanced. So I hope it's understood. That's a concept that I had difficulties in the first place to understand, because sometimes you see, for example, you see these equal highs here, you would say, yeah, but there is also another thing. So if you look at the dealing range, you can clearly see that we have a dealing range here. So if we take here from here, so that's basic concept of ICT that you can find in 2022 mentorship or core content. We can see that we are in the premium array. And what is in the discount? This liquidity. To target the first liquidity, the most obvious in discount is this one. So after that, as we know that we had this big liquidity to target, we're gonna look at other things that could make your trades higher probability. So we're gonna go again on this chart here. That's perfect. So if we go in the 1 hour chart here, that's a chart I use a lot. So I have here the new week opening gap of the actual one, so this week, and we can see here that we are in a kind of consolidation, maybe waiting for the election, because we moved away, come back, moved away, come back, okay? And I have the daily highs and low, so I want to have a 3 days look back. I have the previous week highs and lows. I try to have that, so here I don't have any, all of this, but um, I try to have it on my chart. And so if we compare, so don't focus too much on the chart, but if we compare here, not with YM, but with ES, okay, what can we see here? So if I put this, okay, like this, and maybe take all, and here, look, we have this high taken here. I will not put something there because um, the drone will appear again, but here you can see this high, not taken. Here in yes, we can see yes is weaker, and here we can see Nasdaq took that. So you have a first divergence here in the 1 hour time frame that confirms the narrative to go for lows. And here we can see, yes, all this liquidity here with all these lows here to go into target. And on Nasdaq, you have this big fair value gap here that acted as a breakaway, and now we went to reprice, okay, not to rebalance, to reprice. So this was the confirmation. So now if we go on a 5-minute time frame here, okay, I like to trade the silver bullet, okay. Sometimes I can trade precession. I generally don't trade after the open, so between 9:30 and let's say 10 a.m. Generally, I don't do that. There is a lot of volatility there, and I feel more comfortable trading within the time of the silver bullet. So first of all, we're gonna zoom here. We can see that if you enter in the trade and to be in within the direction here of 9:30, you had this fair value gap there that acted really well here, and we can see the respect at 925, and here also we let a little bit of open, and boom, we send it for the lows I just said it. So at that time I wasn't interesting anymore to short, okay, I didn't want to short, and I saw the possibility to go and to find a long for the silver bullet. So my first narrative that I had with the guy that I coach for the silver bullet New York, it was to find a long, and I'm gonna tell you also why. So if you go on the 15-minute, regardless that we are going lower, we can have some kind of retracement. And where did it happen? So if you look at this leg up, you don't see fair value gap, you don't see any kind of a really obvious PD array, but what you can see is this. So you have this big wick, and all of this here can be called a balanced price range. Why? Because we deliver buy side in this week, after sell side, and again buy side. So all of this is a balanced price range. And if you look here, we just tapped into the low. You have also this volume imbalance there of this balanced price range. But we took this low here, and after moved up, you had this breaker. So that's another confluence that you can use here. Perfect respect with the body, as you can see, and it made the price go higher. So now if I go in the 1 minute, that's really interesting. So you had sell side, move lower here, Here I wasn't so much interesting because I was waiting for the 10 a.m. You had the first presented fair value gap after 9:31, so you have 9:30, no fair value gap. That's the first one. Here it made a BPR, so that was high probability entry, okay, at that moment, and price gave one time, two time opportunities here, but if you waited for the silver bullet at 10 a.m., we had this. So basically, that's also a balanced price range because we have buy side, sell side, and buy side delivery. And after we leave that, but we can also maybe consider that as an no B, as an order block. Why? Because this is consecutive candles going into this sell side, and it changed the state of delivery until going to the target. And why I took this trade, this is not the most important thing here, okay? You don't look only at entry. The first thing is where the price can go, and we can see here the perfect equal highs. So that was a nice trade, I would say, because from the OB to here you had 41 points. That's more than enough for intraday trade. And as a stop loss, you just put it under this OB here. So you could have a really tiny stop loss or just under this wick. So really nice RR and a really easy trade where you follow the trend and you enter inside or this fair value gap for high probability trade or inside this order block just here. So that was the first trade I was seeing today. And after this, we had this, would say this more difficult price action here, but um, we could find something there, but more difficult. So as we went up a lot, we can expect what some retracement after taking this buy side. But also if we look at the 15-minute here, we can see so a dealing range can change, okay? So if I take off again everything we see, you have this high here and this low here. So why I choose this high? Because we can see this is the most important leg here, and we also took buy side here and sell side was taken. So we have a dealing range and we come where? Inside this fair value gap in premium and respect that. You see the body here respecting the fair value gap. So that's what made this high here and what begin the sell for the PM session. So if I put this fair value gap here, okay, I'm gonna take this for a moment and I put bearish fair value gap and go in 1 minute. You will see here really little close above the 15-minute. We just went inside this 1 minute fair value gap several times, but you can see how much we worked here, moved away, went again in this first presented fair value gap here, moved away. 11:30 begins the launch macro. So the launch macro, what does it do? It goes against sell stops or buy stops that are made after 10 a.m. So what do we have after 10 a.m.? We have these lows. That was interesting, and we can see also these equal lows. But under we have what? The new week opening gap. So first of all, I was maybe thinking this is a retracement and we have these equal highs here, we have this kind of equal highs, but what do you need to look is also the signature of the algorithm. So if you look at the 15-minute, you saw that nobody closed above the the CB, and we were in premium, so premium already respected. So that's the first signature. Second is this equal lows here, just a little bit above the new week opening gap. So you need to ask yourself why the price didn't get to the new week opening gap first, but it just stopped few points away. In fact, that's just to engineer sentiment to go higher. But the real place is here, and we can see these big wicks there where retails put their stop loss there and they feel secure there. So we took the stop loss of people that were shorting. Here we can see that's a big pool of liquidity there. Went into the 15-minute fair value gap, begin to go lower. This wasn't interesting me at all. Sorry guys. So this wasn't interesting me at all. This price action began to interest me quite a lot. So if you look at this, that's a consolidation, and you can see how much it goes up, down, up, down, up, down. So it's quite balanced there. And if you take the 50% of the midpoint, so that's a place that ICT says, and that's a really important rule of ICT. When you target on original consolidation, like this one, this consolidation there, you want to take 80% of your position off when you touch the midpoint of the consolidation. And here, look, it touched here, it touched the midpoint to the tick here of this consolidation, and after it begin to move lower. That's where I said, okay, if it cannot go above this consolidation and it stopped here, that's also an algorithmic signature of price. So what did it do after? We have lunch hour beginning. We moved lower, engineered all this sell side here. You can see that. And what did we have also? So I'm gonna take that off for one moment. Breakaway here. So breakaway can be reused as a drawn of liquidity, okay, after the fact, after we made what we did, what we had to do there. So breakaway, engineer liquidity here. So when we were going higher, this is what happened there. We had a 3 drive. So first, second, third, 3 drive here. 1, 2, 3. And the rules for 3 drives, if you need to not have the lows taken. You see, this low is safe, this low safe, and this low again. So you have the 3 drives going where? Into this order block here and this fair value gap. So don't forget that the fair value gap, you take also the volume imbalance. So look here, and this is where I sold. Why? Because we engineered all this liquidity, so I knew that we're gonna begin to move faster. Because to move faster, we need time. So we were inside the macro here, and we need also liquidity to target. And here we had this one, the breakaway, the minor sell side, and also the big sell side here, just above the new week opening gap. And don't forget that new week's opening gap act as really big hole. So that's something that we have a big impact on price and will act as a big magnet. And here we can see how we moved lower until there. So what I did, you see, we had also this breakaway gap just here. So I had 15 micros in the beginning, so entered there, took 5 here, 5 more here, and the 5 other more wasn't in the sell side, it was in the beginning of this new week opening gap. Why? Because I knew that we're gonna run with it. If I would have to be the like perfect, I would have to go at least for the 50% of the new week opening gap, at least, because the algorithm want to spool here and to go at least for the 50%. And you would see that if you look at past new week opening gap, you will see that price action like to go for this 50% of this yeah, real liquidity void. So same thing on the PM session. Let's say you didn't have this trade here. We can observe we still had this sell side there. As you can see, it made perfect equal lows, and after it ran for 10 last minute. So 10 last minute is also what they call the mock, MOC. So same thing. Look, price is engineering liquidity and it's going really slowly higher, as you can see. Start to move lower when at macro. So I wasn't interested in anything going higher. Look now, the ICT would say, not say perfection, but the first presented for value gap. Here. This is what we're consolidating, and at the macro, so at 250 to 310, this is where we began to run. Come back for value gap, so return premium array. When again you have, remember that you have 4 macros in the last hour, so you have also this macro here from, so this is from 310 and this is from 15 here to 45. Okay, and we can see the return back here, the macro kicks in and we go for the new week opening gap. So really nice day, not easy. You need to avoid this consolidation. How we can avoid this consolidation is understand how price runs, and you need nice liquidity to go target. So after the price run a lot, retrace, it would consolidate a little bit, and you need to wait for the right time. So here you can see the macros here and again here. Okay, so, and after, if you have a good conviction, just let your trade play, and yeah, you could yield quite a lot of points if just you trust the narrative and you like to take intraday trades and not just scalp. That's what I like to do. I like to find a trade and have a bigger run, just because you can you can take less risk and just let it run, you know. So I trade PM sometimes, not a lot, to be honest. Not a lot, because I already trade London and New York, but I can trade PM, and it doesn't change really much. PM session can be easier than AM session, especially with nowadays news, that you will have better run than the AM session. And as a narrative, I would say it's quite easy, because trading can be difficult, you know, challenging. But I would say that whatever low you made in the AM session, you want to target that in the PM session. So you want to have the same bias as the AM session. If we hit a high time frame PDOA, like a weekly low, a really important daily low, for value gap, a daily for value gap, a daily volume imbalance, this is where you can have a reversal, okay? But the price has to show you the way that is reversing. Here is not the case. So that's the only moment that you will look on the PM session for reversal, but generally you will look for continuation and going for the actual low of the day. So that's would say classic day, okay? A classic day where um, London consolidating met the high of the day, so you have 70% probabilities that London might make the high of the day. It moved lower, came back into premium, we made an OTE. If you look from here to here, we have an OTE. Moved again lower, came back again OTE. We had, yes, deep retracement, but we have nice movement, so we had a lot of possibility to make nice trade today. So I don't know if you have any question. If you have, you can just ask, and if not, I'm gonna stop this review for today. And remember that we are really close to election, so as ICT says, just don't trade, wait for the election, preserve capital, and not only capital in the money aspect, but also mental capital, because it can do right thing, you know. You can have movement that are not really obvious, not really clean, and maybe strange movement, you know, because they can say something that can influence a lot the market. So I see no question, so have a good afternoon or good night whenever you are, and see you soon, guys. It was Nesby.